Hey guys, in this video we are talking about Datavault AI partner with Mandela digital stablecoin for global financial inclusion. What if sending money anywhere in the world become an easy as sending a text message? Imagine a future where a small business owner in Kenya can receive payment instantly from a customer in New York, where families no longer lose billions of dollars every year to expensive remittance fees, where millions of people without a bank account finally gain access to the global financial system. It sounds like a science fiction, but today artificial intelligence, blockchain, and stable coins are coming together to make this visible a reality. One of the newest partnerships attracting attention is between Datavault AI and Mandela. Datavault AI and Mandela. Together, these companies aim to combine artificial intelligence with digital currency technology in an effort to expand financial access around the world. But what exactly does this partnership mean? Can AI actually transform the future of the money? And could stable coins become the foundation of tomorrow's global economy? Today we are breaking it all down. Before we understand why this partnership matters, we first need to understand the problem it's trying to solve. Over 1 billion adults worldwide still lack access to traditional banking services without a bank account. People struggle to save money securely, receive salaries, access loans, or building financial history. Now imagine try to run a business under those conditions. Even people who do not have the bank account often face another challenge: international payments. Sending money across borders can take several days. Banks charges high fees. Exchange rates reduce the value received, and multiple financial institutions process a single transaction before it reaches its destination. For migrant workers sending money home, these fees can significantly reduce the amount their families receive. The current financial system works, but it's often slow, expensive, and inaccessible to millions. That is exactly where digital financial technologies are trying to make a difference. Interstable coins. When most people hear the word cryptocurrency, they immediately think of Bitcoin or Ethereum, assets that can rise or fall dramatically in the price. Stable coins work differently. A stablecoin is a type of digital asset designed to maintain a relatively stable value, often by being linked to the reserve asset such as the US dollar. That stable makes stable coins potentially more practical for everyday transactions. Instead of worrying whether your payment loses 10% of its value overnight, users can transact with a greater confidence. Stable coin can also settle transactions quickly, sometimes within a minutes instead of days. They are increasingly being explored the international payment, digital commerce, and the financial services through the adoption and the regulation continue to evolve. This is why government, banks, and technology companies paying close attention. Let's discuss about the who is Datavault AI. As you can see on the screen, let's discuss about this now. Let's talk about the first company in this partnership. Datavault AI focuses on artificial intelligence and secure data technologies. Rather than simply storing information, the company's vision is to help organize, manage, protect, and derive value from the digital data using AI-powered tools. Artificial intelligence can enhance massive data set far faster than humans. It can detect unusual activity, identify fraud patterns, improve compliance, and automate complex financial processes. As the digital payments continue to grow, AI is becoming an increasingly important layer of the modern financial infrastructure. Bec- Because moving money isn't about the speed, it's also about trust, security, okay, and intelligent decision making. Datavault AI believes artificial intelligence can strengthen these critical areas, but AI alone isn't enough. It also needs an efficient digital payment network, and that's where the Mandela Digital enters the story. About the Data Vault, AI partnered with the Mandela Digital Stablecoin for global financial inclusion. Here we see who is Mandela Digital. Let's discuss about this. While artificial intelligence is transforming how data is processed, blockchain technology is changing how value moves around the world. That brings us to the second company in this partnership, Mandela Digital. Mandela Digital is focused on expanding access to digital financial service through the blockchain-based technology, including stablecoins. Its broader vision is to help make financial transactions faster, more affordable, and more accessible, especially in regions where traditional banking infrastructure is limited. Instead of relying solely on the conventional banking system, blockchain networks allow transactions to be recorded on a decentralized ledger, which can improve transparency and reduce settlement times. For many people, this could mean receiving payment more quickly, sending money across border with a fewer intermediaries, and participating in the digital economy and just a smartphone and internet connection. But why? Why is this important? Because access to financial service isn't evenly distributed. The cost of being unbanked. Imagine running a small business, but you can't accept digital payment. You can't apply for a business loan. You can't build a credit history. And receiving international payments takes days or isn't possible at all. For millions of people, that's a daily reality. Financial exclusion doesn't just affect individuals, it slows economic growth, it limits entrepreneurship, and it creates barriers to the education, healthcare, and opportunity. Now consider international remittance. Every year, hundreds of billions of dollars are sent by workers to family in the other country. Traditional money transfers can involve multiple intermediaries, delays, and significant fees. If digital payment systems can reduce cost and improve efficiency, more money could reach the people who need it most. That's a one reasonable stablecoin have attracted attention from the business policy and financial institutions alike. Okay, and let's discuss about the why. Why AI plus stablecoin could be a powerful combination. So, what happens when you combine artificial intelligence with blockchain-based stable coins? Potentially you create a smarter financial ecosystem. Artificial intelligence can help detect unusual transactions patterns in real time. It can identify possible fraud before it spreads. It can automate compliance checks designed to meet the financial regulation. It can also analyze payment data to improve efficiency and customer experience. Meanwhile, stablecoins can provide a digital payment layer that operates around the clock. No waiting for banks to open, no weekend delays, no holidays interruptions. Together, AI provides intelligence, blockchain provides transparency, stablecoins provide speed. and it's a combination that many companies believe could reshape digital finance over the coming decade. Of course, success depends on the technology, regulation, security, and public trust. Real world use cases. Let's discuss about the real world use cases. Let's discuss about the scenario. Let's look at how this partnership or similar AI stablecoin technology could be used in practice. Scenario 1: international business. A designer in the Brazil creates marketing materials for a client in New York. Instead of waiting several business days for an international wire transfer, payment settles much more quickly using a stablecoin network. Scenario 2. Let's discuss about scenario 2 and family remittances. A nurse working in the United States sends money to the relatives overseas. Instead of losing a significant portion to transfer fees, a large share of the payment reaches recipient. Scenario 3: a small business payment. A local entrepreneur sells products online to the customer worldwide. Digital payments become faster and potentially more accessible without relying entirely on the traditional banking infrastructure. Scenario 4: AI-powered fraud detection. An unusual transaction is detected rather than the waiting hours for manual review. AI system flag the activity immediately, allowing financial institutions to investigate more quickly. These examples illustrate the kind of possibilities that are driving interest in the combining AI and digital payments technology. Let's discuss about why investors are watching. Artificial intelligence. Digital assets and blockchain infrastructure are among the fastest evolving areas in the financial technology. As companies explore new partnerships and the products, investors are watching closely to see which technologies gain real worldwide adoption. But excitement alone doesn't guarantee success. Every innovation must prove it can deliver value while meeting a regulatory, security, and the operational requirement. And that is exactly what we will explore next. Partnership explain. What is partnership? Let's discuss about this. Now that we understand the technology behind the artificial intelligence and stable coins, let's focus on the partnership itself. The collaboration between Datavault AI and Mandela Digital aims to combine AI-driven data capabilities with blockchain-based digital payments. The idea is straightforward. Artificial intelligence can make financial systems smarter, while blockchain technology can make transactions faster and more transparent. Together, these technologies could help create financial services that are more efficient, secure, and accessible. Let's imagine an AI system monitoring millions of transactions every second. Instead of simply processing payments, it analyzes patterns, detects suspicious activity, assesses potential risks, and helps financial institutions respond more quickly. Meanwhile, the stablecoin infrastructure allows value to move digitally across borders without relying entirely on the traditional payment rails. This combination could reduce operational costs, improve transaction monitoring, and expand financial access for individuals and businesses. But technologies alone doesn't guarantee success. The real challenge is solving real-world problems. How AI could transform digital finance. Let's discuss about this and think about how much data bank process every single day. Millions of payments, account activity, credit applications, international transfers, compliance reports. For human teams, reviewing all this information manually would be nearly impossible, and Artificial intelligence changed that modern AI systems can identify unusual transactions patterns in seconds. They can help detect potential fraud, assist with anti money laundering monitoring, reduce false alerts that waste investigators' times, and even improve customer support through the intelligent automation. Imagine receiving a payment from the country instead of waiting for multiple departments to verify every detail. AI could automate much of the verification process while flagging only transactions that truly require human attention. That means the faster service, lower cost, and better security. This is the one reason why AI become one of the fastest growing investment in the financial technology. Let's discuss about the regulatory challenge. But there is one obstacle no technology company can ignore: regulation. Money is the one of the most heavily regulated industries in the world. Government must protect consumers, prevent fraud, stop money laundering, and ensure financial stability. That means any company can. That means any company working with digital assets must operate within evolving legal and regulatory frameworks. Stablecoins in practical have attracted significant attention from the regulatory worldwide. Questions include: how should your reserve be managed? Who oversees issuers? How are consumers protected? How can financial crime be prevented? Companies entering this space must demonstrate that transparency, compliance, and the robust risk management. Without trust, even the most advanced technology may struggle to achieve widespread adoption. Discuss about the competing with traditional finance. Competing with traditional finance. Another major question is whether digital finance will replace traditional banking. The answer: probably not. At least not anytime soon. Instead, many experts believe the future will evolve the collaboration rather than the replacement. Traditional banks already have the customer relationships, regulatory experience, and the financial infrastructure. Technology companies bring innovation, speed, and new digital capabilities. Rather than competing directly, many banks are exploring partnership with the fintech companies, blockchain providers, and AI developers. If successful, the Datavault AI Mandela digital collaboration could become the part of this broader trend where the established financial systems and the emerging technology work together. Risk every investor should understand. Of course, no emerging technology comes without risk. Investors should remember the partnership and the announcement do not guarantee commercial success. Challenges may include regulatory uncertainty, cybersecurity threats, technology integration, market adoption, competition from the other AI and blockchain companies. Even if the technology performs well, consumer trust and the regulatory approval remain essential. That's why experienced investors look beyond headlines. They ask important questions. Can the technology scale? Does it solve a real problem? Can it generate a sustainable revenue? And will customers actually use it? Those are the questions that will ultimately determine whether this partnership becomes a milestone in a financial innovation or simply another ambitious experiment. Let's discuss about the third, the future of money. The future of money. Let's discuss about this. Every generation experiences a financial revolution. In the early 1900s, cash dominated everyday life. Then came credit cards, online banking, mobile payments, and today artificial intelligence and the blockchain are pushing finance into the next chapter. The partnership become Datavault AI and the Mandela digital represents more than a business agreement. It reflects a much larger trend. Financial service becomes increasingly digital, increasingly interlinked and increasingly global. Imagine a world where opening a financial account takes minutes instead of days, where international payments settle almost instantly, where AI helps stop fraud before it happens, where the business of every size can participate in the global economy, not just large corporations. This isn't guaranteed, but it's the direction many innovators are working toward. The financial system of tomorrow may look very different from the one we know today. Let's discuss about what success could look like. A partnership a partnership like this succeed, the impact could extend far beyond technology companies. A freelance graphic designer in Nigeria could work with client in the California and receive payments within a minutes. A small copy export in the Colombia could sell directly to buyers in Europe without navigating costly international banking processes. Families relying on the cross-border remittances might receive more money their loved ones send. Businesses could reduce payment delays and administrative costs. Government might eventually integrate digital payment technology into the public service, and the consumers could gain more choices in how they store the transfer value. These possibilities explain why digital finance continues to attract attention from the startups, major banks, regulatory, and investors around the world. The roadblocks ahead. But every major innovation faces obstacles. Digital finance is no exception. Cybersecurity remains one of the biggest concerns. As payment systems become the more connected, they also become more attractive targets for the cyber criminals. Then there is a regulation. Different countries have different rules for digital assets. Some government encourage innovation and other move cautiously. Building systems that comply with the multiple legal framework is a significant challenge, and another hurdle is adoption. Technologies only succeed if people trust it. Consumers need confidence and that their money is safe. Businesses need reliable infrastructure. Financial institutions need systems that integrate the existing operations. Winning that trust takes years, not months. So while the opportunities are exciting, the journey towards global adoption will take the gradual rather than immediate. Let's discuss about what this means for investors. For investors, announcements like on the Datavault AI and the Mandela digital partnership can generate excitement, but it's the most important separate headlines from the long-term value. A partnership is the only beginning. Key questions: can the technology scale to the millions of users? Will regulator approve the business models? Can the companies generate sustainable revenue? Will customers adopt the platform? How will they compete with establishment financial institutions and other fintech companies? Successful investing requires looking beyond the short-term market reactions and focusing on the execution, innovation, and the real-world adoption. As always, viewers should do their own research and consider consulting a qualified financial advisor before making the investment. And my final thought, let's discuss about the final thought. The partnership between the Datavault AI and the Mandela Digital highlight an important shift in the modern financial. It's not just about the artificial intelligence. It's not just about the blockchain. It's not just about the stable coins. It's about exploring how these technologies can work together to make the financial systems and more efficient, accessible, and secure. Whether this specific partnership becomes a major success remains to be seen. But one thing is clear: the conversations around AI-powered digital finance is only beginning, and the companies building today's infrastructure may help shape tomorrow's financial world. And let's talk. What do you think? Will AI and stablecoin transform global finance, or will traditional bank continue to dominate? Share your thought in the comment section. We would love to hear your perspective. If you enjoyed deep dive into the future of the finance, don't forget to like this video, subscribe to the channel, and turn on the notification so you will never miss on next analysis of the biggest story shaping the global economy. Thanks for watching.